Today we are going to talk about time frame liquidity. It is one of the most important kinds of liquidity and it can increase your results significantly. I know people that are just using one kind of time frame liquidity, for example previous daily highs or previous daily lows, for their trading strategies, and they are very successful because they practice these concepts consistently and now they are making money from these concepts. Let's talk about liquidity. The most important rule of trading is that you are going to make consistent money from the market if you are consistent with your actions. I mean, you are going to practice and use these concepts every day in our kill zones, for example 2 first hours of London session or 2 first hours of 2 to 3 first hours of New York sessions. So you should be consistent with your actions first. But what is liquidity of time frames or time framic liquidity? Let's close the camera and focus on the concepts. If you see here, you can see I have some boxes on my chart. This is just a very simple indicator. You can find indicators like this in TradingView, but it just shows the Asian session, which is from 18 of the previous day to 1 o'clock in the morning, and the Frankfurt session, which is from 1 to 2 New York, and London session 2 to 5 New York, and the opening of New York session, which is from 7 to 8 New York, and 8 to 10 or 11 New York is going to be the New York session. These are the time frames that we are interested in. But today we are just going to talk about previous daily highs and lows and how we can use them. For using liquidity and inducement concepts, you should have basic smart money knowledge that you can learn in this channel. So don't worry, just follow the smart money concepts playlist, and we are going to use order blocks, shifts, and break-off structures to use the liquidity and inducement concepts for our daily trading. Time frame liquidity and inducement is the liquidity of every time span of the market. For example, even a 1 minute candlestick have some liquidity in its high or in its low. But because we are using these concepts to make better decisions and take better positions and better trades, we are going to use higher time frame liquidity. For example, at least we are looking at sessions liquidity. For example, here we have the Asian session. You can see that the Frankfurt came and liquidated its low and it started to go higher. But today we are just going to use previous daily highs and lows for time framing liquidities. How we can spot those highs and lows, I talked about this in previous videos or in this video. Anyway, you are going to go to settings, appearances, and you are going to tick this box, session breaks. These vertical lines, these blue vertical lines, are a single day. Now we can do two things for marking our previous daily highs and lows. First thing is that we are going to go to daily time frame, and the high and the low of the last candle is going to be our previous daily low and high. For example, let me show you a good example here. We have some daily high here that is liquidated in this candle. But it is not enough for us to take a trade just because the previous daily high or low got liquidated. So the first way is that we are going to go to the daily time frame and we are going to mark the previous daily's highs and lows on our chart. We have one here and we have one here. The second way is just that session breaks I talked about previously. You can see that it is going to show us the previous day range, so we can spot the lowest point and the highest point of previous day as our liquidation pools. But how we can use these concepts? The liquidation of previous daily high, for example here, and previous daily low, for example here, is very important for us. In any kind of trading methods you are using or any strategies you are using, you can mark these highs and lows, so if it gets liquidated and it gets rejected, you can use other strategies to enter the market. But how I use these concepts? I'm going to mark my charts. How I mark my charts as a smart money trader. So I have some kind of rejection block here, so I know that it has a chance to reject from this point in a daily time frame. And you can use, for example, your Fibonacci tools. It's a very powerful tool to spot your levels. For example, we have another important level which is 127, and you can use other liquidation methods. For example, here we have a liquidity point, so it can liquidate these highs and reject from something that we are going to refine in this week or in this rejection block. So we have some kind of narrative here. It came up, it hit our rejection block, and all those confluences shows that we can reject from this level in daily time frame. We are going to go to lower time frames. We can see the market is exhausting here. It is another confluence that we can use to enter the market if the last previous high got liquidated, and we can go here and refine our levels. So we have a very good order block here. I don't know if it got touched, no. And if I go to 1 hour, I know that we have something here. Let me show you. 15 minutes. We have an order block here. You can see that it is a flipping block from this low, and we have another order block here, and we have a very important high here. Why it is a very important high? You can see that if we go to next days, you can see that we have another high here. So these are 2 points of liquidity. So we were here. Now let's pull these boxes here. You can see that the importance of refining. These are not something that you can find in some fake gurus contents, but you can find them here for free. So we have a very important high here, we have a very important order block here, and we have some points that got liquidated in daily time frame. Now what we can do now, I'm using 15 minutes time frames for change of character and some shift in the market to confirm my confluences and confirm my narrative, and I'm going to use session liquidity for 1 minute confirmation. For example, here if I have the Asian session high and low, it is enough for me so I can go and enter the market with a 1 minute shift here. But if I don't have Asian liquidity or other sessions liquidity, other confluences, rather than just the daily highs and lows and that refined order block, I'm going to use 15 minute shifts instead of 1 minute shift. Let's see the lower time frame and continue our strategy. So the first trade is going to be the liquidation of the high of the Asian session. Why? Because it is a very important point of liquidity. So we are going to go to lower time frame here, and we are going to use the entry setup that I taught you in some videos in this channel. I don't know the exact title, but I said that if the market is going to the upside, it comes down and broke the last low, and with an imbalance. It is important to have an imbalance here, and it created some point of liquidity. I'm going to enter the market higher than this point of liquidity, or above this point of liquidity. So we are going to use 1 minute time frame. Why? Because it liquidated our Asian session 2. You can see the exact setup created here. It is the point of liquidity in our trading setup, it is the imbalance, and it is the market shift that we are looking for. So we are going to enter the market here, but I'm going to use this neckline here because I know that it gets touched most of the time. You can close your profits in 4:1 reward to risk ratio, or you can close the half of your profits in 4:1 reward to risk to ratio, and another half in 10:1 reward to risk ratio. Let's see what happens. I don't know the result really. It got touched. It's enough for me. And the other trading opportunity is after the London session, because we are using this previous daily high. If it comes up and it touches this point, this extreme order block, or it liquidates the high of the London session, it is going to work again. Yes, it is hindsight for now, but you can go and test this strategy thousands of times and you can see the results of this strategy. Yes, we are going to have some stop losses, we are going to have some bad days, but overall it is a very strong strategy. So let's see what happens after that. It is another opportunity. I don't know if it works or not. I'm going to take this trade. It is not a very strong trade, but I'm going to take this trade for 4:1 reward to risk ratio. It is a bad timing, but you can see the results. I don't know if it didn't give us the 4:1 reward to risk ratio, but it's the markets. So it went up, it liquidated the high of London session. All highs and lows of sessions have liquidity in them. We are entering here, and 4:1 reward to risk ratio, and you can close half of it in 10 reward to risk ratio. You can see the results. So let's see some examples for daily highs and lows, previous daily highs and lows, so you can get comfortable with using and practicing these concepts. So you can see here as well the high of previous day got liquidated. We are in a good spot to enter selling day trades. Why? Because we have some kind of rejection here. We can go to lower time frames and see if we have a good spot here. Yes, we have a wonderful order block here. So it came up, it liquidated these equal highs. Equal highs are another signature type of liquidity, and we can enter the trade here or here. This high got broken as well and got liquidated as well. So we are going to use our strategy. If it liquidated the high of the Asian session, we can enter on 1 minute time frame, but if it didn't liquidated the high of the Asian session, we are going to use the 15-minute time frames. Let's see what happens here. It is another scenario which we have a breakout of Asian session. I usually use the second type of entry, so I wait until this low gets broken, because the breakout of session Asian session, excuse me, the breakout of Asian session is important as well. So I'm going to wait until it breaks this low in 15-minute time frame, and here we have an order block, or here we have some point of liquidity. We are going to use these points of liquidity, sorry, it's my die, and wait for a confirmation. You can see that it went up, didn't broke the low, it went up, it broke the low. So we are going to use some high as our point of liquidity, which is here. So we enter trade here and we put our stop loss here. First target is 4 to 1. I don't care about 10 to 1 because we are going to make a lot of profit at just 4 to 1 reward to risk ratio. It repeats itself every day, so don't take my word for it. Just go and use these concepts. So we are going to monitor the last day high or low. We wait until it breaks that high and low and it gets rejected from that high and low, and we are going to use some confluences like order blocks, like other points of liquidity like Asian session liquidity for our confirmation, plus the entry setup, which is this setup. It comes down, break the low, we have imbalance here, it is our shift here, it is our point of liquidity here, and we should have some imbalance or order blocks here. So here we can enter the market like this. Sometimes it's a little bit tricky. For example, you may say that it is not a high here, but the market came down, made a high with this shadow, came lower and liquidated that, and it is the exact setup that I'm talking about. Go and practice these methods 1,000 times, 100 times, 10,000 times, and when you got mastered in these strategies and methods, you can use them as your trading strategies. Thank you for your watching. Your shares, your comments, your likes is going to help me a lot, and goodbye.